Hey guys, welcome to this lecture. So in this series, we're going to be talking about the different kinds of securities. And in this lecture, we're going to be focusing on stocks. So before we talk about stocks, we have to talk about what a company consists of. So the first thing is assets. That's just anything that the company owns. So this can be cash, buildings, contracts, and patents, and just any other kinds of intangibles. And the next thing is liabilities. So these are the debts and how much the company owes on each of these assets. And lastly, we have our equity. So that's the company's net worth. And if you remember from a previous lecture, the accounting equation says that assets equals liabilities plus equity. So now let's talk about what a stock is. So a stock is a share of a company's equity, and that's why sometimes you also call stocks shares of a company, or just shares. So if we rearrange that accounting equation from the previous slide, we get that equity equals assets minus liabilities. So let's look at an example. So let's say Apple's net worth is about $3 trillion. So that's their equity. And let's say they had 30 stocks under their name. So each stock would have a share price of $100 billion, right? Because you're dividing 3 trillion by 30. So now let's talk about the purpose of a stock. So companies issue stocks in order to help fund their projects. So by issuing stocks, they're allowing people to pitch in and invest their money into the company so that the companies can help the world and act on their project ideas. So one example of this is if you were to buy Tesla stock, that's the same as funding them money so that they can use it to act out on their projects and create new cars. And the next purpose is a personal one. So this is for you to grow your wealth. And by growing your wealth, this leads to an easier retirement plan and more financial stability. And because you're more financially stable, you can indulge in more pleasurable things like buying pleasurable items. And that's it for this lecture. Thank you guys for tuning in. Have a good day.